So now we are going into the how part, how to apply trend trading, how to draw trends, how to also see a trend. So let's start with the most important part, how to spot a trend. So I have seen a lot of teachings whereby people they are showing you how to see a trend using some indicators, for an example moving averages. But you need to know that if you want to be a pure price action trader, you need to make sure that your eyes are trained. You should be able to see a trend using your own eyes. You should be able to spot a trend using your own eyes. But if you are a beginner, you can use the moving average. A moving average is just a lagging indicator which shows you the direction of the price. For an example, this is my 200 moving average. When price is moving above the 200 moving average, it is guaranteed as an uptrend, and if price moves below the moving average, it is a downtrend. So this is an example of an uptrend because price is sailing above the 200 moving average. So let's see where price was below. For an example here, price was below the moving average here. So meaning the price was moving in a downtrend. So it is just simple as that. But you need to make sure that your eyes are trained as a trader. Your eyes are trained to spot the direction without any assistance. Because you can see here, price is moving up. It is just an uptrend. Uptrend all the way up. So let me just hide my indicator. So being able to spot a trend, it enables you to be ahead of your game. Remember the thing that I told you, that you should be able to spot a trend when it is still in its early state, when it is still in its early stage. So for an example, the people who benefited from this uptrend, who benefited the most, it is the people who saw the trend when it was here, at its early stage where it was beginning. So remember the thing that I told you, that a downtrend, it is lower highs and lower lows, but an uptrend, it is higher highs and higher lows. So if you don't see this, it means that it is no longer a downtrend. And if you don't see this, it means that it is no longer an uptrend. So for an example here, we can see that lower lows, lower highs, lower highs, lower lows, lower highs, lower lows. But here, it is no longer a lower high. It is now a higher high, meaning it is no longer a downtrend. So if it's a higher high and the next thing it's a higher low, so seeing these two things here, it now shows you that it is no longer a downtrend, but it is now an uptrend. So professional traders, they managed to make their entries around this zone because they were able to see that the pattern of a downtrend is now broken, but there is now a pattern of an uptrend, which is information. So they managed to take their buys around this zone, and as the price is moving all the way up, they are already taking their profits. But there are some traders who are going to spot the market here, that wow, the market is moving in an uptrend. Yes, they are correct, the market is moving in an uptrend, but the truth is you are already late, and we don't know when will the market going to go down again. So you are in danger, because those guys who entered the market back there, they are now taking their profits, but you are looking it as an entry opportunity. So timing is the key. So then now the next thing that we need to know is how to draw a trend, line, because trend trading has to do with a trend line. So the most things that you need to know as a trader, it is you need at least 2 points to draw a trend line. You need 2 points to draw a trend line. When the market is moving in an upward move, we are interested in the supporting trend line, meaning the trend line which is below, not the trend line which is above. So we are not interested in a resisting trend line, but we are interested in a supporting trend line. So for you to draw a trend line, you need at least 2 points. So which is firstly your starting point, and secondly your connecting points, and then the most important point, it is the third point, which is your entry point. So once you see your starting point, your connection point, and your third point, that where you are going to enter your market. So for an example here, let me just start here. Let's say here we have our first point, we have our second point, and we connect them. Let's connect them first. We connect our first point, we extend our line like this. So you need to know that the third touch, that's where you're going to be entering your market. For an example here, this is the first, this is the second, and this is the most important one, the third touch, whereby I am entering the market as a buy if it's an uptrend, and as a sell if it's a downtrend. Don't worry, I'll make a example with one direction because it is vice versa when it comes to a downtrend. So that's why I'm making an example with an uptrend only, because it is the same thing when it comes to a downtrend. You just shift the focus. So once you see your third touch, that's where you're going to be entering your market. And there is one thing that I need to really show you. When it comes to trend trading, you need to know that there is a shift. There is what we call trend shift, whereby the market form a new sequence of higher highs and higher lows. Not actually that it is no longer higher highs and higher lows, but it forms a new sequence. Okay, understand this. When it comes to trends, we have two types of trends. We have a strong trend and a weak trend, meaning if it's an uptrend, we can have a strong uptrend and a weak uptrend. So there is a time whereby the market shifts from a strong uptrend into a weak uptrend. So when it shifts there, you need to know that your trend line is going to be disturbed. For an example, here the market was moving up rapidly and aggressively, but then it shifted and it moved up a little bit slow. You need to know that this is a strong uptrend, this is a kind of a weak uptrend. So this shift whereby your trend line is no longer valid, it doesn't mean that it is now a downtrend, but it's a shift from strength. It's a shift of strength from a strong uptrend to a weak uptrend. So when you see such thing happening, that's where you also need to shift your trend line. For an example, you cannot connect these, but you can move maybe from here connecting where is this? Sorry about that. From here connecting this, meaning now you have shifted your focus, and now your focus is on another third touch, no longer at this sequence. Meaning here is your first touch there, this is your first touch, second touch, and you are waiting for your third touch. And again, if you see another shift, for an example here, you see that the market was now forming highs there is no problem. Even there you can draw your trend line like this so that you do not miss any entry. So meaning if you are trading, your trend line is going to be shifting because of market shift, because of momentum shift, shifting in the strength. So I hope it is making sense. And another controversy that we have in trend trading, it is the question that where should I draw my trend line? Should I draw my trend line in the body of the candle or in the tail, which is also known as the wick? Meaning when I draw my trend line, should my trend line touch this tail or should my trend line touch the body? So okay, I'm just going to clarify that. Some will draw their trend line like this, trend line touching the wick. So I'm just going to clarify it. When it comes to the body, this is the main thing that we're interested in, because the wick, it only shows you the past, that price was once here and it then escaped this zone. Meaning here price was once here, but it didn't close here, it closed here. Meaning price was rejected in this zone here. So we only focus on rejection when it comes to candlestick confirmations. But when it comes to trend lines, we are focusing on the open and the close, meaning we are focusing on the body. Meaning if you are going to be drawing your trend line, you will put your trend line there and you will put your trend line there in the close of the candles. Don't look bad at other guys who are saying draw your trend line on the wick. It's not a problem, but as for me, it works for me when I put it on the body, because that's the significant part, that's the most important part, the open and the close of the candle or of the price. We are not interested in where price was rejected. We are only interested in that when it comes to entry confirmations, which I'm going to show you towards the end of this course. So we are only interested in the close and the open, because that's where price is. That's the significant place of the price. So I hope it is making a lot of sense.